What's going on, guys? It's K-Dub here with another episode of Crypto Zombie. So today is Thursday. Hope you're having an awesome week. Having a look at what is going on, however, Bitcoin is down another 4.74%. So currently the intro holds up. We are above 10K, but for how long? It's been a crazy 24 hours, crazy 48 hours actually for Bitcoin. And you could see yesterday we were talking about altcoins actually outperforming Bitcoin. Altcoins were in the green compared to the Bitcoin comparative, but as soon as Bitcoin took that hit overnight, the altcoins got hit 2 to 3 times as hard. You can see right here, Bitcoin dumped down to about $9,477 over here on Bybit futures. We pumped back up, but the question is this just a dead cat bounce? And are we looking to go much lower? Because there is something that showed up on the charts today, an indicator, which the last time we saw this, Bitcoin dumped 50%. Yes, I know what you're saying. And no, I don't think it's going to happen this time, but I just want us to talk about what's going on because there are definitely there's massive indecision right now in the market. Let's just say that, okay? On top of it, we also have the fact that we have $15 trillion worth of negative yielding bonds. We're going to get into that, and we do have some Bitcoin, basically it was a Ponzi scheme, and it looks like they're dumping on the markets currently, so there's a lot of things happening right now. We're going to get into it, we're going to talk about it, and if that sounds good, well, you know what to do. Also, if it's your first time checking out the Crypto Zombie channel and you are not subscribed, what are you waiting for? We do this every single day, even on days like today where, unfortunately, I'm not looking forward to reporting what's going on, but nevertheless, this is the situation. Now, it's not just in Bitcoin and crypto land, okay? We have the Dow Jones Industrial Average down 800 points on the day, which is 3%. I know what you're saying, 3%. That's nothing. Well, in crypto, it's nothing, but it is a big deal when you're talking about the Dow Jones, okay? Now, let me give this a quick refresh live. You can currently see that Bitcoin dominance is around 68.4%. It has gone up a little bit, started pulling back slightly this morning. Ethereum took a massive dump today, down more than 10%. We're sitting around a $263 billion overall market cap. We are sitting much lower than that 300 billion we were at just a little bit ago. And having a look at the big gainers today, Icon is up, not to be surprised. They had that really good news that came out. I've been speaking about them for 2 days now on the channel. Clipper Coin, Ecker Real Estate, not familiar with that one. Nano, Nash, and then basically we go into the stable coins, and then for the most part we enter the red zone. Now currently we are still in extreme fear on the fear and greed index, only up 2 points since yesterday. And I think we can see this is clearly being reflected in the charts. Now, having a look, we did get supported by the 100 moving average. I had a pretty good hunch about this. This is why I talked about it. As soon as we fell below the 50, we were looking basically historically. And for the most part, you do tend to get supported by that 100. So that's basically why I wasn't surprised that that is what happened. So that is good short-term news, right? We did get supported by the moving average that we were anticipating. You could see we fell below the 50. We fell out of the danger zone, and currently we are essentially, if we actually continue upwards, we may be doing somewhat of a slope, which is a good thing. Because you're noticing that we're putting in higher lows, right? Higher low number 1, higher low number 2. So this is actually a good thing. We're not going lower, right? Because we were following this giant descending channel, right? Which, you know, if we were to fall straight down would bring us to about $7,000. So $7,700 actually. So that would be a very, very bearish scenario. You can see currently we are supported by this trend. We spoke about this yesterday. Yeah, we need to get above, we're really below the 4-hour on the EMA ribbon. But the one thing I do want to point out, and obviously I'm not trying to be like a bear here, I'm not trying to spread FUD, but I do want to be as objective as possible. And I want to point out that the RSI yesterday hit a low of about 14. It was like 14.11. Now, the reason I'm bringing this up is because the last time we saw levels this low, I marked out right back here. Yep, you guessed it. That was right before the 50% drop. Look, right here on November 13th is when we actually experienced that level where we actually dropped incredibly low to about 6, which means we did go lower than 14. And that's basically what set off and triggered this massive 50% dump all the way down to the bottom at around 3,100. Now, I'm not saying that's what's going to happen because if you notice, we did spring back pretty much instantly. You know, having a look right here, we had an instant spring back. So maybe it was providing support. Maybe that is a good thing, and maybe we're not going to go any lower than that, and we may have potentially reached a local bottom. Let's talk about that. You can see we have fallen out of the parabolic uptrend, but we do tend to get supported by the lowest of the low on the EMA ribbon on the daily, like we did back here on July 28th. So currently, I would anticipate that $9,700 probably would be that low short term. You can see if we look at this uptrend, we have fallen below it. Now, I do want to point out that we have fallen below it in the past, just in this recent parabolic run when we came, above it April 1st, we fell below it and we kind of started kissing it right here. We were having some trouble staying above it, right? But then once we got back above it, it did become support. So there is a chance that we might see ourselves sort of just go sideways where it may become the resistance short term, right? Like it did back here. So really, as long as we stay relatively around this level, then I wouldn't have to get ultimately bearish anytime soon. Having a different look at the chart, you could see we didn't even go down to the danger zone, which is around that $9,400 level. We actually wicked up before that, and we actually closed the candle supported above the $9,700 level, which was our sort of next danger zone had we fallen out of the channel, right? Or excuse me, of the wedge. Having a look at it in a different way, you can see we are still supporting it, currently sitting around $10,000 even. So we are still inside this giant ascending wedge that we've been forming, only wicking out just a little bit. So that is good news moving forward. Now, having a look at the market cipher, the market cipher has been putting in a lot of green dots recently, but you have to notice that it has been accompanied with these X's, which basically the yellow X's are manipulation. So when you're looking at this, you want to pay more attention to the fact that you're seeing the red diamonds and the manipulation, plus the fact that you had this red blood diamond that we put in up here. Well, that signaled a probably short-term bearish trend, right? Now, the fact that we did have this green diamond down here and we had the curve cross over, yes, that would have been a good opportunity to put in a little bit of the long. However, currently, like I said, markets are extremely indecisive. You are noticing, though, Bitcoin dominance starting to go back up again. So that is something to note. Probably explains why the altcoins took a hit. But I do want to just reiterate what I've been saying on this channel time and time and time again. The trend is your friend until the end, guys. And the trend is still going up. I mean, you could see even on the Super Guppy, like I know, Super Guppy, right? But once Super Guppy tends to go green, as you guys can see over here, it tends to stay green for a very, very long time. Super Guppy turned green on April 4th of 2016, and it stayed green basically all the way through the entire bull market, okay? Currently, we are just in the beginning of a green trend. And I want to point out something that Plan B said. He said Bitcoin's 3-month struggle to break the magical 10K feels like the beginning of 2017's struggle to break 1K. We all know what comes next. Rocket emoji, right? So let's take a trip down memory lane and kind of see if this is sort of feeling similar to what's happening right now. Well, this would be the beginning of 2017. And you can see right here, this red line represents the all-time high of the last market. And then this is that $1,000 level that we're trying to break through. So you can see right here, Bitcoin finally broke through on January 1st. Happy New Year, everybody. We went all the way up to that $1,182 level, only to fall down. And let's see exactly what Bitcoin did. We put in a 36% pullback, okay, in just a week, falling all the way back to $748. Now, from that, kind of feels like what happened when we went up to 14K and fell back down, right? Now, having a look at the bottom, Bitcoin then had a little bit of a struggle right here, as you could see, but eventually was able to break above it all the way to a high of about $1,320, and that was over the course of 57 days. And then Bitcoin had a subsequent pullback yet again. I remind you, below $1,000, all the way down to $893, and that took 2 weeks, and that was another 32% pullback. Once again, Bitcoin struggled to get above the $1,000 level again. We finally did. We struggled, we had a pullback, and then we finally blasted above it. And you could see this entire period, right, from start to finish, basically from when we broke out all the way to when we finally started going up took about 118 days. So we were in this area for quite some time, and I can only imagine what people were thinking back then, probably very similar to what we're all thinking right now, right? However, I do want to point out, we all know what happened after that, and basically we went on a pretty incredible bull run all the way to the all-time high, okay? So if we're putting in something similar to that, well, I just wanted to bring that to your attention. Now, another analyst that is not phased currently is Peter Brandt. The reason that I mentioned Peter Brandt is because he was the Bitcoin bear that called the massive, massive sell-off that we had in 2018. Well, he probably was one of the most difficult ones out there to convince that we were bullish, and he did turn bullish once again. And he says Bitcoin remains above the pace of its 2015 to 2017 bull run for now. The 2015 to 2017 trend tested its trend moving average multiple times. He shows with the green arrows. The current trend has yet to do so. And you can see right here, he sort of has this level saying $8,997. So kind of seems like a lot of people are saying 9,000 now. So Peter Brandt is saying 9,000. We had Goldman Sachs, right? They came out and said 9,000 as well. So currently that is the situation. And I do want to play a clip from Peter Brandt's video. Now this is back from May 9th, so this isn't current, but I want to show you what sort of convinced him to start flipping from that bearish into bullish sort of mentality. And it sort of does play into why he still does today think that we are currently in a bull trend.
Well, you have to look really at the long-term chart that goes back to 2011, 2012. And what you'll see there is a magnificent thing that happened going into the 2013 high. And that was a parabolic move. And it was a parabolic move on a log scale. A parabolic move on a log scale is a magnificent thing. It may only happen once in a decade. And so we saw that parabolic advance be broken, and then we saw the market from 2013 into 2015 correction, and then entered another parabolic move. So we have two parabolic moves in the same market. That's just unheard of. And of course, that topped in December of 2017, and we spent 2018 correcting. And I think that there is a chance that we are going now into the third parabolic move of modern times. The idea that you look at a market and consider it to be a long-term chart when it's only a decade long is pretty magnificent. And then if you see the possibility of three parabolic moves in a decade's period, that's unheard of. That perhaps has not been seen since we saw German interest rates in the 1920s. So this is unprecedented. And so the big question in my mind is, are we going into a third parabolic move in Bitcoin, which would be absolutely historic? And for right now, I think the evidence comes down on the side that that is a real possibility. The moving average that I look at, which is a weekly chart moving average, turned up here about 4 weeks ago. The last time that moving average turned up was in early 2015 when Bitcoins went from $350 to $19,900, depending on what exchange you're trading.
So long story short, Peter Brandt thinks that we are still in the clear and we are entering Bitcoin's third parabolic move, all right? But we do need to be serious about what is going on here because currently, as you can see, the Dow has plummeted 800 points. Signs of global economic slowdown roiled the markets yesterday as shares dived and investors fled to bonds with such intensity that short-term yields rose above longer-term ones for the first time since the crisis of a decade ago, an inversion many market watchers saw as a strong signal of an approaching recession. I know, not something that we want to talk about, but maybe this is time for Bitcoin to finally act as that store and that hedge, basically like it's supposed to be, right? So the Dow Jones plummeted 3%. The broader S&P 500 also fell 3% and is down more than 6% off its July peak. And what? Wednesday's sell-off on Wall Street hit financial services badly with Goldman Sachs dropping more than 4%. Goldman Sachs? Weren't we just supposed to run out and buy Bitcoin? Anyway, the sharp decline comes after a rally on Tuesday that followed a statement by U.S. trade negotiations that aggressive tariffs on some Chinese-made products, including popular consumer goods, would be delayed 3 months to about December 15th. Well, an inverted yield bond curve is a classic warning sign of a recession, having preceded every economic decline in the past 60 years. In fact, there was just one fake out. Meanwhile, Donald Trump continues his call for further cuts in U.S. interest rates, ramping up pressure on central banks to make the change at their next meeting in September. So, like my buddy Max Kaiser says, Bitcoin has no top because fiat has no bottom, right? We could just keep printing and printing and printing. So, according to Deutsche Bank, 27% of global bonds traded are now negative yield. So this represents about $15 trillion worth of debt. Or as Van Eck asset director Gabor Gurbax commented, this is 75 times the total Bitcoin market cap. He says, and I like this, it is time for Plan B. Basically, if you lend the government $100, you get back $90. Global economic uncertainty around unchecked quantitative easing, trade wars, deflationary technology, and political instability has driven more and more investors towards negative yielding bonds, whereas historically the government would pay you interest for lending them money. Instead, now you are paying for the privilege of being able to have these safe havens offered to your wealth and still lose money anyway. You can see right here, the U.S. curve has inverted before each recession in the past 50 years. Like I said, one time there was a fake out. Could this be a fake out? Possible. Not saying that it's not. Okay, just pointing that out. When short-term yields climb above longer dated ones, its short-term borrowing costs are more expensive. You can see under these circumstances, companies often find it more expensive to fund their operations, and executives tend to temper off-shelf investments. So basically, guys, this is it right here. And if I break it down, you can see this is pretty much all time. You can see we had this terrible back here in 1980, fell down here in 1989. Obviously, 2008 financial crisis. I don't need to tell you what happened there. And currently, guys, we are falling below it yet again. We are right on the teetering point, sitting at around 0.01. So things are not looking too good for that moving forward, guys. But there is something else that could be contributing to the sell-off. And you can see right here from Dovey Wan, she said just in, basically, you had this Chinese Ponzi scheme, and it looks like they're selling 70,000 Bitcoin and 800,000 Ethereum. So currently right here, it was Plus token. This was created around, it was mid-2018 and promised high-yield investment returns at different rebate percentages, classic Ponzi structure. Well, basically, Dovey attached data on all the wallet addresses, including the Bitcoin and Ether and EOS, known to be associated with them. Alongside these addresses, they had attached investigative data from security audit firm Perkshield that reveals the money flow from Plus token wallets as early as July this year. So you can see right here, you have Bittrex, Huobi. And it looks like Chinese traders have reportedly claimed that an unknown address has in recent days been dumping 100 Bitcoin constantly on Binance, which Wan suspects to be connected to the scheme. So the Plus token scheme was identified as being the largest single incident of loss in a recent summary of 2019 crypto theft from blockchain security firm CipherTrace. Now, I do want to point out that Wan's estimates differ a little bit because she was reporting 200,000 Bitcoin and is it 200,000 Bitcoin or 800? It's just 700K. I don't know. These numbers keep changing, but yeah, long story short, Wan put the total of estimated funds scammed higher at around 3.5 billion. So, I mean, obviously we're having difficulty getting the exact number on this, but it does look like these guys are dumping on the market. So that could also be pushing the price down as well. And before we go, that being said, I don't want to end on all doom and gloom. There was this interview that was done by it was done with actually Andrew Yang. So he's the presidential candidate that's actually pretty supportive of blockchain and cryptocurrencies and things of that nature. So definitely check this out if you haven't, guys. I will drop that below. And one more thing, ending on some good news. You can see Bitcoin investors suddenly exhibit extreme fear, similar to December 28th situation. However, you do have Larry Cermak, butting in saying, interestingly, according to Coinbase's data, 67% of customers with large Bitcoin holdings within the top 10% are actually buying Bitcoin rather than selling Bitcoin in the last 24 hours. So to sort of end today's video on a good note, the whales are actually accumulating Bitcoin at these levels. So what does that mean? Take it with a grain of salt. But that being said, I guess we can end on some good news. That is it for today, guys. Also, friendly reminder, today is the last day for the Bybit basically promotion. I think it's today. Yeah. So basically what you have to do is you deposit 0.2 Bitcoin and you get $110. Normally it's only $50. Just reminding you guys because today is the last day for that. But that being said, that is it for me today. Thank you so much for coming back to the channel. You guys rock. Everyone that's been liking, subscribing, and commenting, really, really appreciate it. Also, shout out to everyone that's been supporting the channel by using the referral links below. It does help the channel out. It doesn't cost